So 2 years ago, I really knew nothing about the stock market, nothing about investing. And over the last 2 years, I've learned so much. And one of the things I keep hearing over and over again during this educational process was the idea of simple portfolios and using index funds to help get you towards financial independence. And I was super skeptical. I figured there's no way that somebody could have 1, 2, possibly 3 mutual funds, and that's it in their entire portfolio, and that would give them enough diversification and also protections against volatility in the market. And it wasn't until I read this book, A Simple Path to Wealth, that I really got on board with index fund investing. I am now completely on board with using index funds to grow my wealth over time. In this video, I want to go through the maximum 5 funds that you would really ever need in your portfolio to reach success. And frankly, for a couple years, I'm really a 1 fund portfolio kind of guy, and then I will go into 2 and possibly 3. I'm going to give you all the options from a simple 1 fund portfolio all the way up to 5 if that's the route that you want to take. Remember, you are not Brad Finn and I am not you. Whatever you decide to do with your money is up to you. I am not a professional. I'm just giving you my life experiences. So before you make any moves with your money, please guys, contact a professional and make sure you're making the right decision for you, your income, your age, where you live. There's so many factors. The first one is the bread and butter VTSAX. I've made a video explaining what it is, how you could buy it, how you automate it. This right now currently is the only fund that I have in my Roth IRA and also my 403Bs. VTSAX is the Vanguard Total Stock Market Index Fund. It gives investors exposure to the entire US market, the equity market, including small, mid, large cap growth, value stocks. It gives you the full spectrum. Now, this is very, very similar to VFIAX, which is just the S&P index. And the reason that I go with VTSAX is because I'm going to get those small cap funds too. I'm going to get a full spectrum of the entire stock market, not just the S&P 500. And this makes life really, really simple because when I was first learning about personal finance, I followed Dave Ramsey and he was telling me to go in these growths and mid growth and international. I had no idea what he was talking about when he was talking about his mutual funds. This right here, it kind of does it all, even from the international perspective. VTSAX, with all of the large companies in this country, has a lot of indirect international exposure, which for some people, even most, is good enough. If you want some more international exposure, I'll get to that in 1 second. But for me, right now, with all of the huge companies in the United States dealing in foreign markets, like I said, you're getting that indirect exposure. To answer the diversity question that I get all the time, I love when somebody with a 100 stock portfolio comes to me and says, you can't just have 1 index fund. That's not diversified enough. You gotta be more diversified. I'm like, there's over 3,000 companies in VTSAX. You really can't get more exposure than the entire total stock market, can you? And it's not like all these companies inside VTSAX are weighted the same. You're getting exposure to the big companies on a larger percentage, and they go down the chain, and the smaller companies have a very, very small impact on the index fund. And the last thing that I want to mention before I move on to my next fund is that VTSAX also has a very, very low expense ratio. And for people that don't know what the expense ratio is, here's a very simple breakdown of it. It is the amount of money that company needs to operate that particular index fund. You see this number in terms of a percentage, and that percentage can change depending on time. But right now, VTSAX has an expense ratio of 0.04%. And what that means is for every $1,000 you have in that fund, Vanguard is going to take 40 cents. It's not a lot of money. They are one of the lowest broad-based index funds in the entire market. You might be able to find some cheaper, but they're not going to have the reputable reputation that Vanguard has. Now, because stocks have a lot of volatility, meaning they can go up or down pretty quickly, as we get older, we want to lower the risk of that volatility. And we do so by incorporating bonds into our portfolio. Now, right now at 38 years old, I do not have any bonds in my portfolio. And for me, what choice seems right for me right now is when I turn 40, I will start to slowly add bonds to my portfolio. And I'm going to do so with the second Vanguard fund that I recommend, VBTLX, which is the Total Bond Market Index Fund. This fund essentially does the same exact thing as a total stock market fund, but it does so with bonds. So once again, we're going to have this low expense of 0.05%, and we're going to have this large diversification across the entire bond market. VBTLX has 30% in corporate bonds, 70% in US bonds, all maturities are short, intermediate, long-term issues. It is an awesome, awesome index fund when it comes to bonds. And bonds come with a lot less volatility. And the reason so is because they are going to pay you interest, and that interest is pretty fixed. Unlike the dividend, you get interest for a bond fund. And the way I see it right now at my age and the education that I have, which definitely could change over time, I don't see myself ever really straying away from VTSAX and the bond market index fund as well. Now, as I mentioned before, there's going to be some of you that are going to want more direct international exposure when it comes to your portfolio, and more than that, indirect exposure that VTSAX has. And when it comes to that more direct exposure, I'm going to recommend this third Vanguard Index Fund. That fund is VTIAX, and it is the Vanguard Total International Stock Market Fund. The fund offers investments a low-cost way to gain equity exposure in both developed and emerging international markets. It has an expense ratio of 0.11% right now, and it is a great way to do what VTSAX does outside of the country. Like I said, for me, I don't need that direct exposure. I'm okay with the indirect that VTSAX gives me, but some people, they want that direct international exposure, and this index fund is really the way to go. And just like there is a United States bond index, there's also an international bond index. If you wanted to go even further into your portfolio, that is VTABX. It is the Vanguard Total International Bond Index Fund. Like I said, something that most of us will never even get into. I know personally, I'll probably never get to this fund, but hey, you might want it, so I wanted to tell you about it. The last fund I want to talk to you about is something that might show up in my portfolio outside of the bond index and VTSAX, and that is a REIT index. And what a REIT is, it's a real estate investment trust, and it is a way to get involved with the real estate market. Now, this sector is outside the stock market, so it gives you a little bit of protection against the stock market, and also is going to give you some portfolio diversification. It comes with an expense ratio of 0.12%, which is a little higher, but it's not terrible. And like I said, this fund just invests in real estate investment trusts, companies that purchase office buildings, hotels, and other real estate properties. So if you have like a real estate itch and you want to get involved with real estate indirectly from buying investment properties and stuff, this is something that you might want. And like I said, as I grow VTSAX and my bond index, this might be something that you do see pop into my portfolio even before the international stocks and the international bond indexes. So the way I see it, you can really get away with maybe two, that VTSAX and that bond index. And for me, the third one that might trickle in there is going to be that REIT index. But other than that, guys, that's really all you're ever gonna need. The one thing about these funds that I did talk about, they have a $3,000 minimum to invest in Vanguard into those funds. So if you don't have that amount of money, they all have a similar ETF, which is an exchange traded fund, which pretty much gives you the same exact exposure with some other small differences that you can look up on your own. I'll leave each one of those ETF symbols right here so you could check them out if you do not have 3,000. And the great news is once you reach 3,000 in those ETFs, you can convert them right to the Admiral Fund with no problem if you're inside Vanguard. If you haven't got your hands on this book yet, I highly recommend it. It was something that really put me over the edge of understanding what's going on with just simple fund investing. I'll leave some other videos about VTSAX and retirement funds. And down here, YouTube will give you something that they think you should watch that I have made. And until I see you on the next one, guys, stay positive, work really, really hard. Always be kind to other people. Hope you have yourself an amazing day and an even better tomorrow.